What's up, guys? It's Munch again. Sorry I forgot to make a video yesterday. I was super busy with stuff at home. But I want to show you guys the small profit I made on my trade that I was posting in the group chat. So you can see this is my TD Ameritrade account. This is a trade right here. First, I bought one options contract. Expiration date 22 September. $444 was the strike price. And it was a put option at 274 is what I purchased it at. And I sold it at 3.9. And you can see that reflects here. $274, about $390. So we're going to take a look at the chart and see how it looked. So this is my Thinkorswim app. You can see right here, it actually shows, I requested that it shows where I made my trade. So the one contract at 274, so that was about right here. Now these candlesticks are the chart price of the option, and this purple line is the chart price of the stock. No, I'm buying the options of the stock. So I got in right here, 274. That was when it was peaking right here at the open. So I bought a put option because I expected it to go down, and it did. As the stock went down, the price of the option went up all the way up to $516. But as you can remember, I was out of day trade, so I couldn't get out. I had to wait for the next morning. And then, lo and behold, even though I was up, $200 on the day at the close, it went down all the way $356, and then market open, it started all the way down here. So that was actually, about $20 in the minus at market open, from profiting almost $100 to minus 20. And that just comes with the risk of holding overnight. You never know what the market's going to do, if there's news that's going to come out and affect the stock. But I expected, I saw my indicators and I forecasted it was going to go down, and it did. But I trade scared. I always trade scared. So, the moment I made my money back, for sure, anything else was just upside. So 274, and I got out right here at 3.9. And it was how much did I make? 3.89. We'll say 120 bucks. Small profits. But singles add up, and it was a very strategic play. I saw that the market was going down. It's been in a downward trend. You can see as I zoom out. It hit a high of the previous day. It was going up a lot. It was crossing over the 200-day SMA. So I figured that it had to go back down, and then it did. And that was reflected not on the 13th, but on the 14th. And I missed out on all this potential upside, $400, even up to $500. But I played safe. It's still a 30% gain on a trade, 40%. But looking at the indicators, you don't have to see the news all the time. Sure, it's good to kind of look at what the president's talking about. What are the financial analysts of Wall Street talking about? What they predict the market's going to do. But the most important thing is to just look at the price action. What are the candlesticks telling you? The story lies in the candlesticks. If you see a big crash, it doesn't matter if they're telling you, the S&P 500 is going to do wonderful. It's going down, and that's what you need to focus on. You need to see the big dips. You got to see the bounce plays. See if it's falling. See if it's breaking its support levels. See if it's not passing its resistance levels. And make trades accordingly. I predicted this yesterday, got out with a small profit, but singles add up. Even though it's 10% here, 20% there, 30% there, over time your account will grow, and you just can't let your emotions overcome you when you want to make a trade. Stick to your guts, stick to your indicators, and I wish you the best.